All right, let's do this. SLB's 2023 annual report, the Form 10-K they filed with the SEC.
It's a big one.
It is, but it's basically our roadmap for this deep dive.
Yeah.
So much to unpack about where this energy giant is going.
And it's a fascinating journey, believe me. They're not just drilling for oil anymore.
Right. They're right in the thick of this global energy transition.
Absolutely.
Okay, so right away, they're talking about this energy trilemma.
Yeah.
What's that all about?
Well, it's the big challenge, isn't it? I mean, everyone's facing it.
Yeah.
How do we meet the world's growing energy needs while keeping costs down and decarbonizing quickly? It's a tough one.
It is.
SLB wants to be a leader in solving this, not just surviving it.
That's a big claim.
Yeah.
And they even rebranded, right, from Schlumberger to just SLB.
More than a name change, for sure.
It is.
It's like they're saying, hey, we're not your grandpa's oil company anymore.
Right. So how are they structured to actually pull all this off?
They've got 4 main divisions. Think of them like a well-oiled machine, each part with a specific job.
Okay, I like that analogy.
You've got digital and integration, reservoir performance, well construction, and production systems.
So digital and integration, is that where all the tech stuff lives?
Yeah.
All the data analysis and AI?
You got it. It's about optimizing performance, giving their customers the insights they need to make smarter decisions. One great example is their work with Equinor.
Oh, yeah. I read about that.
Johan Sverdrup field in the North Sea, they used digital twin technology to basically create a virtual model of the entire field.
Wow.
It helped them optimize production, cut costs significantly.
So it's not just about collecting data, it's about actually using it to make things better.
Exactly. And that's where their expertise really shines.
Okay, what about reservoir performance? That sounds pretty down to earth.
Pun intended.
Maybe.
Well, it's all about understanding what's happening underground. Figuring out how to get the most out of oil and gas reserves, but also things like geothermal energy.
Oh, so they're using their knowledge of oil and gas and applying it to other sources too.
Right. Their expertise in things like seismic imaging, reservoir modeling, that's really valuable here. They're even working on projects to use old oil and gas fields for carbon storage. Pretty cool, huh?
Wow, that is pretty cool.
Okay.
From the depths to the surface, what about well construction?
This is the heavy lifting, literally. Drilling, engineering, making sure those wells are built safely and efficiently. They've developed some incredible new technologies.
I was reading about their drill-up system.
Yeah. That one uses AI and automation to optimize drilling performance, cuts down on downtime.
It's like the self-driving car of drilling rigs, right?
Kind of. It's already being used in major oil and gas projects all over the world.
Amazing.
Yeah.
Okay, and then finally, production systems bringing it all home.
That's it. This is about getting those hydrocarbons or whatever energy source they're working with flowing to the surface and into the pipelines. Some really cutting-edge stuff here, especially their subsea production systems.
I was reading about those. Those can operate in ultra-deep water, right?
Yeah. Opens up a whole new world of possibilities for offshore energy.
The variety is amazing.
It is.
They're not just an oil company anymore, are they?
Not even close. And all of this is supported by a huge network of research and development centers. These are their innovation hubs.
So they're not just sitting back. They're actively looking ahead.
Absolutely. They've identified 3 main areas for growth.
Hit me with them.
Core, digital, and new energy.
Okay, let's break those down. Core. That sounds like their bread and butter, the traditional oil and gas stuff.
Yeah, but even their core is evolving, They're
Yeah.
developing technologies to make oil and gas production cleaner, more efficient, getting more energy out with less environmental impact, and they're going all in on digital technologies.
Like those digital twins we talked about.
Exactly, but it's way more than that. It's about using data to optimize everything, predict equipment failures, even reduce methane emissions. It's about making their entire operation smarter and more sustainable.
Wow. And then there's new energy. That's where it gets really interesting, right? Are they going all in on renewables?
They're being strategic about it, focusing on areas where their expertise really gives them an edge.
Okay.
For example, geothermal energy that uses a lot of the same subsurface knowledge as oil and gas.
Right. So they're not starting from scratch.
They're not. And they're also leveraging their experience with these complex production systems for things like hydrogen and carbon capture.
So they're adapting their existing skills to these new fields.
Exactly. They've even got a project to develop a large-scale geothermal power plant in Indonesia. It's pretty impressive.
It is, but they've also set this pretty ambitious goal. Net zero greenhouse gas emissions by 2050.
Yeah.
And that includes their customers' emissions, not just their own operations. That's a huge undertaking.
Yeah.
How realistic is that, given their history?
It's massive, no doubt. We're talking about Scope 3 emissions here. Those are the emissions generated by their customers using SLB's stuff.
Right.
And those are really hard to control.
So how do they even plan to tackle something that big?
It's a multi-pronged approach. For starters, they're trying to minimize their own footprint, electrifying their equipment, using renewable energy at their facilities, that kind of thing.
Leading by example.
Exactly. But that's just the beginning. The real challenge is those Scope 3 emissions.
Mm-hmm.
They're focusing on what they call transition technologies. These are products and services specifically designed to help their customers reduce their emissions. So think technologies that minimize methane leaks from oil and gas wells, or improve energy efficiency in drilling operations, or even enable carbon capture and storage.
So they're trying to bake sustainability into the very tools they're selling.
That's the idea. It's like saying, hey, we're not just going to help you extract energy, we're going to help you do it cleaner. Of course, a lot of this is still early stage. It'll take time.
Yeah, it will be fascinating to see how this all plays out, but it does seem like they're taking this energy transition seriously.
They are, no doubt. They're acknowledging the need for change and trying to be part of the solution. Whether they can hit that net zero target by 2050, well, that's the multi-billion-dollar question.
It is. Okay, so we've talked tech, we've talked goals, but what about the people?
Yeah.
SLB is this massive global company over 100 countries.
Huge.
How are they handling the human side of this energy transition?
Well, they know that their workforce is key to all of this. They're putting a lot of emphasis on diversity and inclusion, recognizing that different perspectives are essential for innovation.
And they're operating in some pretty complex environments. That's got to come with some geopolitical challenges, right?
Absolutely. The report talks about those risks, especially the situation in Russia. They've had to make some tough calls.
Yeah, like suspending new investments there.
Right. It's a tightrope walk trying to navigate all these global events while still moving forward.
Then there's the whole digital side of things. With all this tech they're using, cybersecurity has to be a major concern.
Huge concern, you're right. The more we rely on digital systems, the more vulnerable we become. And SLD knows that. They've put a lot of resources into cybersecurity.
So what are they doing to actually keep their systems and their customers' data safe?
They've got a dedicated cybersecurity team led by a cybersecurity director who reports directly to the top.
So they're not messing around.
Nope. This team handles everything from assessing risks to implementing security measures, responding to incidents, staying up to date on the latest threats. They're also working with external experts, doing regular audits to make sure their defenses are strong.
Because it's not a matter of if a cyber attack will happen, it's when, right?
Exactly. And we're talking critical infrastructure here. A successful attack could have massive consequences.
For sure. And it's not just about the tech either. They're also investing in training their workforce to be cyber aware.
Right. Strong passwords, recognizing phishing scams, that basic stuff can make a huge difference.
Because sometimes the weakest link is human error.
Absolutely. But all this tech, all these investments wouldn't mean much without the people doing the work, right?
Yeah. What's SLB doing to make sure they've got the right workforce for this energy transition?
Well, they emphasize that their people are their most valuable asset, and they're putting a lot of effort into building a diverse and inclusive workforce.
What does that look like in practice? Is it just ticking boxes, or are they actually making changes?
They're going beyond quotas. Their workforce generally reflects the places where they do business. So in the Middle East, you'll see a lot of local employees that helps them understand those markets better.
Right.
But they're also focusing on gender diversity, which is a big deal in an industry that's been historically male-dominated.
It is. Are they actually making progress there?
They've set some pretty ambitious goals. They want 25% female representation in their salaried workforce by 2025 and 30% by 2030.
Okay.
As of December 2023, they were just shy of that 25% target, so they're getting there.
That's good to hear.
Yeah.
So what are they doing to promote gender diversity?
It's a lot of things. They've got a global code of conduct that prohibits discrimination. They have networks of diversity champions within the company. They're actively working to develop female leadership.
So they're trying to create a culture where everyone feels valued and respected.
Exactly. They're realizing that a diverse workforce isn't just the right thing to do. It's also good for business. Different perspectives lead to better ideas.
Absolutely. Speaking of which, let's talk about a key part of their strategy. Intellectual property. They're constantly innovating, coming up with new technologies and processes. How do they protect all that? It seems like it would be easy for competitors to just copy them.
It's a challenge for sure, especially in a competitive industry like this. But they take it very seriously. They've got a whole system for filing patents, enforcing their intellectual property rights, keeping their trade secrets under
It's
wraps.
like a high-stakes game of chess, always thinking several moves ahead.
That's a great way to put it. And it's not just about legal measures, it's about fostering a culture of innovation within the company.
So their employees feel empowered to come up with new ideas knowing their work will be protected.
Exactly. It's that innovate or die mentality. But innovation takes money, right? Let's talk about the financial performance. They've reported some pretty impressive numbers for 2023.
They have. Let's dive into that next. Where are they seeing the most growth and what's driving their success?
Well, their international operations are a big part of the story. Remember those long cycle projects we talked about?
Yeah.
Those are really paying off, especially in places like the Middle East and offshore basins.
So the Middle East, are we talking the usual suspects like Saudi Arabia, UAE?
Those are key, but also Iraq, Kuwait, Qatar. These countries have massive energy reserves and big plans. They need SLB's expertise, whether it's conventional oil and gas or exploring new things like blue hydrogen production.
And what about those offshore projects? Those always seem like massive undertakings.
They are. Deepwater drillings, subsea production systems. It's complex and expensive. The potential is huge, especially in places like Brazil, West Africa, Southeast Asia. Think about it. These projects take years to develop, and they generate revenue for decades.
Wow.
They're less vulnerable to those short-term price swings you see in the oil and gas market.
So it's a buffer against market volatility.
Exactly. And SLB is a leader in this space. They've got the technology, the experience, the global reach to handle these mega projects. It's a big reason why they're seeing such strong growth and profitability.
It's really interesting to see how their revenue mix is evolving. You mentioned, well, construction is their biggest division. Is that still the case?
It is. In 2023, they pulled in over $13 billion from well construction alone. Think of it as the foundation of their business, literally.
Makes sense. They're involved in every stage of building a well, right? From drilling to cementing to managing those massive rigs.
You got it. And they're seeing really strong growth in this division internationally. The report highlights strong performance in regions like the Middle East and Africa, lots of activity both onshore and offshore.
It really shows how interconnected the world is when it comes to energy.
It does.
What about production systems? How's that division doing?
Also doing very well. Brought in nearly $10 billion in 2023, driven by strong international sales of their production equipment, especially those subsea systems.
So they're helping companies all over the world extract and transport those hydrocarbons. It's like the veins and arteries of the global energy system.
That's a great analogy, and all of this is contributing to some pretty impressive profit margins.
Yeah, their pre-tax operating margin hit 20% in 2023.
It did.
Okay, before we get too carried away celebrating, let's talk about some of the risks they're facing. One that jumped out at me was currency exchange rates. With operations in so many countries, they must be vulnerable to those fluctuations in the value of the dollar.
It's a great point. It's definitely a factor for any global company, and SLB addresses it head-on in the report. Their main currency is the US dollar, but they have expenses all over the world. So if the dollar weakens against, say, the euro or the yen, their costs go up, and that can eat into their profits.
So how do they protect themselves from those wild currency swings? Do they just cross their fingers and hope for the best?
Not quite. They use some pretty sophisticated financial tools called derivative instruments to manage this risk.
Derivative instruments. Okay, you're going to have to break that down for us. This sounds a little intimidating.
Imagine you're planning a trip to Europe 6 months from now, and you're worried that the euro might get stronger against the dollar, making your trip more expensive.
Okay, I've been there.
So you go to a bank and you lock in today's exchange rate for the amount of euros you'll need. That's essentially what SLB does with foreign currency forward contracts. They agree to buy or sell currencies at a specific price on a future date, protecting themselves from big fluctuations.
So it's like buying travel insurance for your money.
Exactly. They also use these things called cross-currency interest rate swaps. Those are a bit more complex, but they essentially allow SLB to convert debt they have in one currency into debt in another currency, usually US dollars.
Okay, it sounds like they've got a whole team of financial wizards working behind the scenes. But all this digital transformation must also make them a target for cyber attacks, right?
Absolutely, you're right. The more we rely on digital systems, the more vulnerable we become. And SLB is very aware of this. They've invested heavily in cybersecurity.
So what is they actually doing to keep their systems and their customers' data safe?
Well, they've got a dedicated team, as I said, led by a cybersecurity director who reports directly to the top brass.
So they're not messing around. Having someone at that level shows they're taking it seriously.
They are. This team is responsible for everything: assessing risks, implementing security measures, responding to incidents, staying up to date on all the latest threats.
That's a big job.
It is. They're also working closely with external experts and doing regular audits to make sure their defenses are strong. Because remember, it's not a matter of if a cyber attack will happen, it's when. And with critical infrastructure, the consequences could be huge.
Absolutely. And it's not just about technology either, right? They're also investing in training their workforce to be cyber aware.
You got it. Strong passwords, recognizing phishing scams, all the basic stuff that can make a big difference. Because sometimes the weakest link is human error.
True enough. But all this tech, all these investments, wouldn't mean much without the people actually doing the work. What's SLB doing to ensure they have the right workforce for this energy transition?
They emphasize that their people are their most valuable asset, and they're putting a lot of effort into building a diverse and inclusive workforce.
What does that look like in practice? Are they just ticking boxes, or are they making real changes?
They're going beyond just hitting diversity quotas.
Yeah.
Their workforce nationality mix generally reflects where they do business. So in the Middle East, you'll see a lot of local employees, which helps them understand those markets better.
Makes sense.
But they're also focused on gender diversity.
The energy industry has traditionally been very male-dominated. Are they actually making progress in that area?
They've set some pretty ambitious goals. They're aiming for 25% female representation in their salaried workforce by 2025 and 30% by 2030. As of December 2023, they were just shy of that 25% target.
So they're making strides, but there's still work to be done. What specific actions are they taking to promote gender diversity?
It's a multi-pronged approach. They have a global code of conduct that prohibits discrimination, a network of diversity champions who promote inclusion within the company, and they're actively working to develop female leadership.
It sounds like they're trying to create a culture where everyone feels valued and respected, which is essential for attracting and retaining talent.
Absolutely. They're recognizing that a diverse workforce isn't just the right thing to do, it also makes good business sense. Different perspectives lead to better ideas and better solutions. And speaking of solutions, let's talk about a big one that's central to their strategy: intellectual property.
They're constantly innovating, developing new technologies and processes. How do they protect all that intellectual property?
Yeah.
It seems like it would be easy for competitors to try and copy them.
It's a constant challenge, especially in a competitive industry like energy, but they take it very seriously. They have a robust system for filing patents, enforcing their intellectual property rights, and keeping their trade secrets under wraps.
So it's like a high-stakes game of chess, always thinking several moves ahead to protect their advantage.
Exactly. And it's not just about legal measures, it's also about fostering a culture of innovation within the company. They want their employees to be constantly coming up with new ideas and solutions, knowing that their work will be protected.
It's that whole innovator die mentality, right?
Yeah.
But innovation doesn't come cheap. Let's talk about their financial performance. They've reported some pretty impressive numbers for 2023.
They have. Their revenue reached $33.1 billion, an 18% jump from the previous year.
Wow, that's some serious growth. What's fueling that success? Is it all those international projects we talked about?
That's a big part of it. Their international revenue grew by 20% year over year, driven by those long-cycle projects in the Middle East and offshore.
But what about North America? Didn't you say earlier that drilling activity was slowing down in the U.S.?
That's right. There has been a decline in U.S. land drilling, but they've managed to offset that with growth in other areas, like offshore activity in the Gulf of Mexico and increased sales of their production systems.
So they're strategically shifting their focus to areas with higher demand.
Exactly. They're being adaptable and responding to market dynamics. And it's not just about revenue, they're also becoming more profitable.
That's always a good sign. What's driving that increased profitability?
It's a combination of things. First, they're seeing higher activity levels, which means they're utilizing their resources more efficiently. They're also benefiting from better pricing for their services and a shift towards those higher margin international projects we talked about.
So they're in a bit of a sweet spot right now, with strong demand, favorable pricing, and efficient operations. But can this last? The energy market is notoriously volatile.
That's a great question, and it's one that investors are always asking. Let's dive into their balance sheet and see how they're managing their finances.
Okay, so let's talk money. What does their balance sheet tell us about their financial health? Are they sitting on a pile of cash, or are they drowning in debt?
They've actually got a pretty solid balance sheet. As of December 31st, 2023, they had almost $4 billion in cash and short-term investments.
That's a nice cushion to have, especially in uncertain times.
Exactly. It gives them financial flexibility, and they also have access to $5 billion in credit facilities, which they haven't even tapped into yet.
So they've got a lot of borrowing power if they need it. But they do have some debt, right?
They do. Their net debt at the end of 2023 was about $8 billion.
Okay, that sounds like a lot. Is that something to be concerned about?
Not necessarily. It's important to look at debt in relation to their earnings and cash flow. And in SLB's case, they're generating enough cash to comfortably handle that debt. They've also been actively reducing their debt in recent years, which shows they're committed to maintaining a healthy balance sheet.
That's reassuring to hear. So they've got cash on hand, access to credit, and they're managing their debt. It sounds like they're in a pretty good financial position.
They are. And they're not just sitting on that cash, they're investing it back into the business.
Okay. Before we move on to their investments, let's take a quick detour and talk about their accounting policies.
Yeah.
It can get a bit dry, but it's important to understand how they're reporting their financials.
Absolutely. They adhere to generally accepted accounting principles, or GAAP, which is the standard framework for financial reporting in the U.S. It ensures consistency and transparency so investors can compare apples to apples.
But within GAAP, companies can still make choices about how they account for certain things, right? Like how they recognize revenue or value their inventory.
That's right. And those choices can have a significant impact on their financial statements. So it's important to understand their specific accounting policies, which are outlined in detail in the notes to their financials.
One of the key things I always look at is revenue recognition. How do they determine when they can actually book revenue?
They follow the general principle of recognizing revenue when it's earned and realized or realizable.
Okay, that sounds logical enough, but what does it mean in practice?
It means they don't just book revenue when they sign a contract. They have to actually deliver the services or products and be reasonably certain they'll get paid.
So for those long-term contracts, like those big offshore projects, they don't just book all the revenue up front.
Exactly. For those, they use the percentage of completion method. So they recognize revenue gradually as they complete portions of the project.
That makes sense. It gives a more accurate picture of their financial performance over time. But what about inventory? They must have a lot of equipment and materials on hand. How do they value that?
They use a conservative approach, valuing inventory at the lower of cost or market.
So if the market value of their inventory drops, they'll take a hit on their financials, even if they haven't sold it yet.
That's right. It's a way to ensure they're not overstating the value of their assets. And they have similar policies for recognizing asset impairments.
Impairment? That sounds ominous.
It basically means that if an asset's value declines significantly, maybe because of changes in technology or market conditions, they have to write down its value on their books.
So they're being realistic about the value of their assets, not just pretending everything is rosy.
Exactly. They're trying to present a fair and accurate picture of their financial position. And all of this is subject to regular audits by independent auditors to ensure they're following the rules.
That's good to know. It gives investors some peace of mind. Now, something that always impresses me about SLB is the sheer scale of their operations. They're truly a global company with operations in so many different countries.
It's mind-boggling, isn't it? And they provide detailed information about their operations in different segments and geographical regions.
So we can actually see how each part of their business is performing.
Yes. They break down their revenue, operating income, and assets by their four main operating segments: digital and integration, reservoir performance, well construction, and production systems.
So we can see which parts of the business are growing the fastest and which ones might be struggling.
Exactly. And they also provide a geographical breakdown covering North America, Latin America, Europe and Africa, and Middle East and Asia.
That's really helpful for understanding their global footprint and how each region contributes to their overall performance.
It is. It gives you a much richer understanding of their business than just looking at the top-line numbers. And speaking of numbers, let's talk about their debt again. You mentioned earlier that they have a significant amount of debt outstanding.
Yeah, about $8 billion. That number still seems pretty big to me. How are they managing all that debt?
They're being very proactive about it. They've been steadily reducing their debt in recent years, and they have a very manageable debt maturity profile.
Debt maturity profile, what does that mean?
It basically means they don't have any big chunks of debt coming due all at once. Their debt is spread out over different maturities, which gives them more flexibility and reduces their risk.
So they're not going to get caught in a situation where they have a huge debt payment due and not enough cash to cover it.
Exactly. They're being very strategic about how they manage their debt. They use a mix of different debt instruments like senior notes, commercial paper, and bank loans. And they also use those derivative instruments we talked about earlier to manage their interest rate and currency risk.
So they're not just blindly taking on debt. They're being very careful and using all the tools available to them to manage that debt effectively.
Precisely. And all of this careful financial management is reflected in their strong cash flow.
Okay, let's talk about cash flow. It's one of the most important metrics for any business cell, right? It shows whether they're actually generating cash from their operations, not just racking up sales on paper.
You got it. An SLB is a cash-generating machine. Their cash flow statement shows just how much cash they're bringing in from their core business activities.
So they're not just surviving, they're thriving.
Absolutely. And they're using that cash wisely, investing it back into the business to fuel further growth.
Okay, let's talk about their investments. What are they spending their money on?
They're investing in a variety of areas, including capital expenditures, acquisitions, and investments in other companies.
Capital expenditures, those are the big ticket items, right? Like new drilling rigs or production facilities.
Exactly. And they're also making acquisitions to expand their capabilities and enter new markets.
We talked earlier about their focus on new energy sources. Are they making any acquisitions in that space?
They are. They're being very strategic, looking for companies that complement their existing expertise and give them a foothold in key growth areas.
So they're not just throwing money around, they're being very deliberate about their investments. It's like they're playing a long game, positioning themselves for the future of energy.
You're exactly right.
Yeah.
And all of this investing and acquiring is reflected on their balance sheet, specifically in an item called goodwill.
Goodwill. It sounds pretty intangible. What exactly is that?
Goodwill represents the excess of the purchase price over the fair value of identifiable net assets acquired in a business combination.
Okay, in plain English, please.
Basically, when SLB buys another company, they often pay more than the book value of that company's assets. The difference between the purchase price and the book value is goodwill. It represents things like brand recognition, customer relationships, and the value of a skilled workforce.
So it's the stuff you can't really touch, but is still valuable to the business.
Exactly. And they have to test that goodwill for impairment regularly.
Impairment again. So they have to check if the value of those intangible assets has gone down.
That's right. It's a way to ensure their balance sheet accurately reflects the true value of their acquisitions.
It sounds like they're being very thorough and careful in their accounting. But let's not get bogged down in the numbers. Let's talk about something a bit more dynamic. Their working capital. How are they managing their short-term cash flow?
They're very focused on maintaining healthy working capital, which basically means having enough cash on hand to meet their short-term obligations.
So they're not going to run out of money to pay their bills or their employees.
Exactly. They keep a close eye on their key working capital components: accounts receivable, inventory, and accounts payable.
Let's break those down. Accounts receivable, that's the money they're owed by their customers, right?
Yes. They need to make sure they're collecting those payments promptly. Otherwise, they could face cash flow problems.
And inventory, that's all of the equipment and materials they have on hand. Too much inventory can tie up cash and hurt their working capital.
Right. They have to find the right balance between having enough inventory to meet demand, but not so much that it becomes a burden.
And accounts payable, that's the money they owe to their suppliers.
Yes. They try to negotiate favorable payment terms with their suppliers so they can hold on to their cash for as long as possible.
So it's like a constant juggling act, managing all these different moving parts to keep their working capital healthy.
It is, and it's an essential part of their overall financial health.
Now, one thing that's always struck me about the energy industry is its seasonality. I imagine SLB's business is affected by things like weather patterns and customer spending cycles.
You're absolutely right. The report mentions that the spring thaw in Canada and other northern climates can temporarily affect activity levels.
Because it's harder to operate in those conditions.
Exactly. And then you have the winter months in places like the North Sea, Russia, and China, where severe weather can also disrupt operations.
So they have to factor those seasonal variations into their planning.
They do. They adjust their staffing levels, inventory, and other resources to try and mitigate the impact of those seasonal swings.
But they're a global company. Right. So wouldn't their operations in different parts of the world balance each other out to some extent?
That's a great point. Their global footprint does help them diversify their revenue stream and reduce their exposure to seasonal variations in any one region.
So they're not putting all their eggs in one basket, so to speak.
Exactly. They're spreading their risk geographically.
Now let's talk about competition. SLB isn't the only player in the energy services game. They've got some pretty big competitors, right?
Oh, yeah. They're up against some heavy hitters like Halliburton, Baker Hughes, and Weatherford, just to name a few. It's a very competitive industry.
So how do they stay ahead of the pack? What's their secret sauce?
They differentiate themselves by offering a comprehensive suite of services from exploration to production. They're also investing heavily in research and development, constantly coming up with new technologies and solutions.
So it's a combination of breadth and
Depth. They do a lot, and they do it well.
And they've built a strong reputation, right? For quality, reliability.
Essential in this industry, absolutely. Safety and performance are everything.
They are. But they're not immune to geopolitical risks, operating in all these different countries. We talked about Russia, but what other geopolitical challenges do they face?
Well, Russia's a big one, no doubt. But they're also in other regions with a lot of instability, parts of the Middle East, Africa, South America. It's a constant balancing act, assessing and managing those risks.
So they have to be nimble, adaptable, ready to change plans if things shift on the ground.
Exactly. They have teams dedicated to monitoring political and economic developments all over the world, looking for threats and opportunities.
That's got to be a demanding job, keeping up with everything.
It is, but it's crucial for a company with such a global reach.
It is. Now let's talk about their corporate governance. Who's steering this ship, and how do they make sure it stays on course?
Well, like most companies, they have a board of directors, they oversee management, make sure things are being done in the best interests of shareholders.
Okay, but boards can sometimes just be rubber stamps for management. How do we know this board is actually independent and effective?
Good question. Their board is made up of experienced, independent directors, and they have a diverse range of expertise. So it's not just a bunch of yes men. They're there to challenge management, hold them accountable.
So they're providing that check and balance, making sure the company is run ethically, responsibly.
Exactly. That's their role.
What about executive compensation? How do they decide how much to pay their top execs?
That's always a sensitive topic. Their compensation program is designed to attract and retain top talent, but it's also tied to the company's performance, their strategic goals.
So it's not just big bonuses no matter what happens.
Nope. They have a compensation committee made up entirely of independent directors. They set the exec pay, and they look at a bunch of factors: market benchmarks, company performance, individual contributions of each executive.
So it's a performance-based system.
It is. They're trying to balance rewarding executives for their work with making sure their pay is aligned with shareholder interests.
Now let's talk about something that can be a real headache. Income taxes. Operating in over 100 countries, their tax situation must be incredibly complicated.
You can say that again. They have to comply with tax laws in every single jurisdiction where they operate, and those laws can be wildly different.
So they must have a whole team of tax experts just to keep up with it all.
They do. They have a dedicated tax team. They manage everything, making sure they're following all the rules and regulations in every country.
But tax laws are constantly changing, and there's always room for interpretation. How do they handle those uncertain tax positions?
They take a very conservative approach. They only recognize a tax benefit for an uncertain position if it's more likely than not that it'll hold up under scrutiny from tax authorities.
So they're not trying to push the limits or play games with the tax man?
Nope. They're playing it safe and being transparent about their tax accounting.
Okay, good to know. Now let's talk about another important risk factor: environmental liabilities. Their operations involve a lot of potentially hazardous materials. What steps are they taking to protect the environment and manage those risks?
They're very aware of their environmental responsibilities. They comply with all the relevant environmental laws and regulations wherever they operate.
But accidents happen, even with the best intentions. What if something goes wrong and they're held liable for environmental damage?
They have insurance, of course, to protect them from those potential liabilities. And they also recognize those liabilities on their balance sheet when it's probable that they'll have to pay up, and they can reasonably estimate the cost.
So they're not just sweeping potential environmental costs under the rug.
No, they're being upfront about those risks and taking steps to mitigate them.
Okay, good to hear. Earlier we talked about their commitment to sustainability, their goal of net zero emissions by 2050.
Big goal.
It is. But they also use some non-GAAP financial measures in their reporting, like free cash flow. Can you explain what that is and why they use it?
Sure, free cash flow is a metric that a lot of companies use. It kind of supplements their traditional GAAP financials. Basically, it's cash flow from operations minus capital expenditures.
So it shows how much cash they're actually generating from their main business activities after taking into account the money they're investing back into the business.
Exactly. It gives investors a clearer picture of their financial health, their ability to generate cash.
Right. But it's important to remember that those non-GAAP measures aren't subject to the same level of scrutiny as the GAAP financials.
That's true. That's why SLB provides a reconciliation so you can see how their free cash flow number compares to their GAAP numbers, how they got there.
Transparency is key. Now let's talk about the people who are buying all these services and products. Their customers. Who are they and how are those relationships changing?
Their customer base is basically the who's who of the energy world. National oil companies, big integrated oil companies, independent operators.
So they're not reliant on any one customer.
Nope. They've got a diverse customer base, which spreads out their risk. No single customer accounted for more than 10% of their revenue in recent years.
That's good to know. They're not overly dependent on any one company. But how are those relationships changing as the energy industry goes through this transition?
They're definitely evolving. SLB is working closely with their customers to understand their needs as they change, developing solutions to help them reduce their environmental impact, operate more efficiently.
So it's more of a partnership than just a transactional relationship.
Yeah. Exactly. They're in this together, figuring out this complex energy transition.
Okay, makes sense. Now let's shift gears a bit and talk about their suppliers. With a global supply chain, they must face some pretty unique challenges.
Oh, absolutely. Managing a global supply chain in this industry is no walk in the park. They're sourcing goods and services from all over the world, which exposes them to all sorts of risks.
Like what? What are some of the things that can go wrong in their supply chain?
Well, you've got the obvious things, natural disasters, political instability, anything that can disrupt transportation and logistics.
So they need backup plans in case those things happen.
They do. They have contingency plans, and they work closely with their suppliers to identify potential problems early on, find solutions together.
So communication and collaboration are key.
Absolutely. They have to build strong relationships with their suppliers to keep everything running smoothly.
Now, let's talk about a specific accounting policy that's relevant here. Their treatment of leases. They must lease a lot of equipment, right?
Tons. Everything from office space to drilling rigs to vehicles, and under GAAP, they have to account for those leases on their balance sheet.
So it's not just about what they own, it's about what they're using, even if they don't technically own it.
That's right. They have to recognize a right-of-use asset and a lease liability for all their leases.
Okay, so the right-of-use asset represents their right to use that leased asset, and the lease liability represents their obligation to make the lease payments.
Exactly. And they recognize the lease expense over the lease term. It's all about giving a clear picture of their lease obligations.
Okay, now let's talk about some of the legal and regulatory challenges they face. Operating in so many countries, I imagine compliance is a real headache.
It can be. They're subject to all sorts of laws and regulations covering everything from environmental protection to health and safety to anti-corruption.
So they have to stay on top of all those rules and make sure they're complying with them everywhere they operate.
They do. They have a whole team of legal and compliance pros who monitor those regulations, making sure the company is playing by the rules.
But laws are always changing. Interpretations can vary from one country to another. How do they manage all that complexity?
They have a really thorough process for identifying and assessing legal and regulatory risks. They're always monitoring what's happening in the countries where they operate, adapting their practices as needed.
So they're not just crossing their fingers and hoping for the best.
Nope. They're being proactive, trying to stay ahead of the game. They're committed to doing business ethically and responsibly, no matter where they are.
Now let's talk about one of their core strengths, their commitment to research and development. They're really pushing the boundaries of technology in the energy industry.
They are. They invest a lot in R&D. It's a big part of what makes them stand out from the competition. They have this whole network of R&D centers around the world. They're collaborating with top scientists, engineers, industry experts.
So it's not just about tinkering in a lab. They're engaging with the wider scientific community.
Absolutely. They know that innovation often comes from working together, sharing ideas, and they're looking at a wide range of areas.
Like what? What are some of their R&D priorities?
Well, they're always looking for ways to improve their existing products and services, make them more efficient, more effective. But they're also developing totally new technologies, exploring new energy sources, finding ways to reduce their environmental impact.
So it's a mix of making things better and coming up with completely new solutions.
Exactly. They're playing both a short game and a long game, trying to stay ahead of the curve in this rapidly changing industry.
Okay, let's circle back to their employees for a moment. We talked about diversity and inclusion, but what about benefits? Do they offer things like pensions and healthcare?
They do. They offer a pretty comprehensive benefits package, including pensions and other retirement benefits, healthcare coverage, and they account for those benefits in line with GAAP.
So they're not just attracting and retaining talent, they're looking after their employees' long-term well-being.
Exactly. They know their employees are their most valuable asset. Investing in their well-being is good business.
Absolutely. But they're also operating in an industry with inherent health and safety risks. How do they manage those risks, keep their workforce safe?
Safety is a top priority for them. They have a strong commitment to health and safety. They've got all sorts of programs and procedures in place to protect their employees and contractors, and they comply with all the relevant health and safety laws and regulations in every country where they operate.
So they're walking the walk, not just talking the talk when it comes to safety.
Exactly. They track their safety performance very closely and are constantly looking for ways to improve.
And they must also deal with the risk of natural disasters. They operate in some parts of the world that are prone to hurricanes, earthquakes, all sorts of natural disasters. How do they factor that into their risk management?
Natural disaster risks are a big deal for them. They have contingency plans to deal with potential disruptions, and they have insurance to protect them from financial losses. They monitor weather patterns and other natural hazards very closely, and they take steps to try and minimize those risks, like reinforcing infrastructure in areas that are prone to hurricanes.
So they're not just reacting to disasters, they're trying to anticipate them, prepare for them.
Exactly. And they're always learning from past events, refining their plans to be even more resilient.
Now, we talked earlier about their acquisitions, but sometimes companies also sell off parts of their business, right? Have they done any divestitures recently?
Yeah, they do divest businesses sometimes if they don't fit with their strategy anymore. They're careful about it, though, making sure they get a fair price for the assets and that the divestiture makes sense strategically.
So not just randomly selling things off, they're doing it to streamline their operations, focus on their core strengths.
That's it. And sometimes those divestitures involve forming joint ventures with other companies.
Joint ventures. So they're teaming up with others to share risks and rewards.
Exactly. It's a way for them to get into new markets, access new technologies, or get expertise they don't have in-house. They've formed joint ventures for all sorts of things, from drilling services to digital technologies.
So it's a strategic way to partner with others.
Absolutely. They're not just jumping into joint ventures for the sake of it. They're making sure these partnerships make sense for the long term, create value for their shareholders.
Okay, now let's talk about a topic that can be a little tricky. Critical accounting estimates. What are those, and why are they important for investors to understand?
Well, when SLB is putting together their financial statements, they have to make some estimates about the future, right? These are called critical accounting estimates, and they cover things like how long their assets will last, whether they'll be able to collect all the money their customers owe them, the fair value of their investments.
So it's not just about crunching numbers. There's some judgment involved, too.
Exactly. They use their best judgment to make these estimates, but those estimates can have a big impact on their financial results.
So investors need to pay attention to these estimates, understand the thinking behind them, because they can affect the company's profitability.
Absolutely. SLB does a good job of explaining these critical accounting estimates in the notes to their financial statements. They also provide what are called sensitivity analyses, showing how changes in these estimates could affect their financials.
Okay, so they're being transparent about the potential impact of these estimates. That's good.
Transparency is key.
Now, let's talk about something that's always interesting. Stock-based compensation. They grant stock options and other stock-based awards to their employees, right?
Yeah, it's pretty common. It's a way to attract and keep top talent.
Right. But those awards can also dilute the value of existing shares, can't they?
They can. That's why it's important to understand how SLB accounts for the stock-based compensation. They recognize the expense for these awards over the vesting period. They use different valuation models to estimate the fair value.
So they're not just ignoring the cost of these awards. They're accounting for them.
Exactly. And they explain all the details of their stock-based compensation program in the notes to their financials.
Okay, great. We've covered a lot here. Their financial performance, their risk management, their accounting policies. But what about the big picture? What's their outlook for the future?
They're pretty optimistic. They see continued growth in international markets, and they believe those long-cycle investments will provide some stability, even if the oil and gas market gets a little bumpy.
So they're betting on those mega projects to keep them on a steady course.
They are. And they're also confident that their investments in new technologies, like those transition technologies we talked about, will position them well for the energy transition.
So they see themselves not just surviving, but thriving in a world that's moving away from fossil fuels.
Exactly. They're looking at these challenges as opportunities. They're not just an oil and gas company anymore. They're an energy technology company.
That's a bold vision. It'll be interesting to see how it all unfolds.
Absolutely. This annual report gives us a peek into their strategy. They're thinking about the future. But the energy world is constantly changing. They'll need to adapt, stay innovative to keep up.
Well, this has been an incredible deep dive into SLB's 2023 annual report. We've covered so much: their financial performance, their strategic goals, the risks and challenges they face.
It's a complex company, that's for sure, and they're in a fascinating industry. They're trying to balance their history in oil and gas with this need to move towards a more sustainable energy future.
And it's clear they're not sitting still. They're investing in new technologies, expanding into new markets, taking steps to reduce their environmental impact.
It'll be really interesting to see how they navigate the challenges and opportunities ahead. Will they succeed in becoming a leader in this energy transition? Only time will tell.
That's what makes these deep dives so compelling. We get to explore these companies, try to understand their strategies, and think critically about their future.
And hopefully you've picked up some valuable insights along the way, whether you're an investor, a customer, or just someone who's curious about where the energy world is headed.
So keep learning, keep exploring, and keep asking questions. That's what the deep dive is all about. Until next time.
It is a lot to think about.
It is, and that they operate in some pretty risky areas, right?
Yeah.
Prone to natural disasters.
Oh, for sure. Hurricanes, earthquakes, you name it. They take those risks seriously. They've got plans in place to deal with potential disruptions,
Right.
and of course insurance to protect them financially.
Of course.
They keep a close eye on weather patterns, other hazards,
Yeah.
and they take steps to try and reduce those risks, like reinforcing infrastructure in hurricane-prone areas.
So they're not just waiting for a disaster to happen, they're thinking ahead.
Exactly. Always learning from past events to, trying to refine those plans.
Right. Now, earlier we were talking about their acquisitions, but sometimes companies also sell off parts of their business.
Right.
Have they done any divestitures recently?
Yeah, every now and then they'll divest a business if it doesn't really fit with their strategic goals anymore.
Right.
But they're very careful about it,
Yeah.
making sure they get a fair price for what they're selling
Right.
and that it makes sense strategically.
So it's not just a fire sale, they're thinking it through.
Exactly. And sometimes those divestitures involve setting up joint ventures with other companies.
Joint ventures, so they're teaming up,
Yeah.
sharing risks and rewards.
That's the idea. It's a way to get into new markets, get access to new technologies or expertise they might not have in-house.
Makes sense.
They've done joint ventures in a bunch of areas, everything from drilling services to digital tech.
So it's another strategic tool on their belt.
Absolutely. They're not just forming these partnerships randomly, they're making sure it aligns with their long-term goals, creates value for their shareholders.
Okay, now let's get into something that can be a little tricky to wrap our heads around. Critical accounting estimates.
Yeah.
What are those and why should investors care about them?
Well, when they're putting together their financial statements, they have to make some educated guesses about the future, right? Things like how long their assets will last. Will they be able to collect all the money their customers owe them? What's the fair value of their investments?
Right.
Those are called critical accounting estimates.
Okay.
And they're based on their best judgment, but they can really affect the company's bottom line.
So investors need to pay attention to those estimates, understand the assumptions behind them, because it could impact the company's profitability.
Absolutely. And SLB does a pretty good job of explaining these estimates in their financial statements. They even provide what they call sensitivity analyses, showing how changes in those estimates could change their financial results.
So they're not hiding anything, they're being transparent about the potential impact.
Transparency is key.
Okay. Now let's talk about something a little more, interesting. Stock-based compensation.
All right.
They grant stock options and things like that to their employees, right?
Yeah. Pretty common practice. It's a way to attract and retain top talent.
Right. But those stock-based awards, they can also dilute the value of existing shares, can't they?
They can. That's why it's important to understand how they account for it.
Right.
They recognize the expense for those awards over the vesting period. They use different valuation models to figure out what they're actually worth.
So they're not just ignoring the cost, they're factoring it into their financial statements.
Exactly. And all the details about their stock-based compensation program, that's all laid out in the notes to their financials.
Okay, we've covered a ton of ground here.
Yeah.
Their financial performance, their strategy, the risks they're facing, their accounting policies. But what about the big picture? What's their outlook for the future?
Well, they seem pretty optimistic. They're expecting more growth in international markets,
Right.
and they think those long-cycle investments will provide some stability even if the oil and gas market goes through some ups and downs.
So those mega projects, they're kind of their anchor.
In a way, yeah. And they're also banking on their investments in new technologies, like those transition technologies we discussed,
Right.
to position them well for the energy transition.
So they're not just hoping to survive, they're planning to thrive in this world that's moving away from fossil fuels.
That's the idea. They're embracing the challenge, seeing it as an opportunity. They're not just an oil and gas company anymore. They're an energy technology company.
It's an ambitious goal. It will be really interesting to see how it all plays out.
It will. This annual report gives us some clues, how they're thinking about the future. But the energy landscape is always changing, so they'll have to stay flexible, innovative to keep up.
Well, this has been a fascinating deep dive into SLB's 2023 annual report. We've covered so much, from their financials to their strategic goals to the risks they're facing, the accounting policies. It's been quite a journey.
It has. It's a complex company, and the energy industry is constantly evolving.
It is. They're trying to balance their legacy in oil and gas with this need to adapt to a more sustainable energy future.
Right, and they're definitely not sitting still. They're investing in new technologies, expanding into new markets. They're trying to reduce their environmental impact.
It's a really interesting story, and it'll be fascinating to see how it all unfolds. Will they be successful in this transition? Only time will tell.
Only time will tell.
That's what I love about these deep dives. We get to explore these companies, really understand their strategies, think critically about what the future holds for them.
And hopefully you've learned something along the way, whether you're an investor, a customer, or just someone who's interested in the future of energy.
So keep learning, keep exploring, keep asking those tough questions. That's what the deep dive is all about.
Absolutely.
Until next time.